we did have some of the commentary that came in from some of the Fed members even overnight, and let me talk about some of them. Now, we have Fed's Mesters as well as William talking about it. So, firstly, market participants are continuing to eye on the Federal Reserve commentary closely, and that's what the Cleveland president Loretta Mester said, that what they're holding out in terms of rates are steady at the current levels, and she believes that the move will help central bank bring inflation back to that 2% target. Furthermore, she's adding that she expects progress on inflation over time, but at a slower pace versus last year. However, Mester reiterates that risk inflation have risen and risk to weaker growth and hiring have diminished, which means in a strong economy, the Fed has the space to look at more evidence for inflation in terms of moving back to the target before actually cutting the rate. So let's wait and watch for that. Other than that, New York's Federal Reserve President John Williams also welcomed the arrival of a softer inflation print in April, but said that the positive news is not enough to call for rate cuts anytime soon. He believes that the restrictive policy stance is something in a good place, and that he doesn't see any indicators to alter the stance as of now. This is what the commentary, Shreyansi, we're seeing coming in time and again, that, they're saying wait and watch before we actually jump into another rate cut, and that's the commentary coming in from both of them as well.
All right, then there you have it. So that's the commentary coming in from Fed officials. But let's shift focus then, and the IMF criticized the Biden administration's decision to aggressively raise tariffs on some Chinese goods, underscoring potential risks to global growth and trade if tensions between the two economies worsen. IMF largely believes that US would be better served by maintaining open trade policies vital to its economic performance. Research also shows that fragmentation in the global economy can fuel potential losses for global GDP of as much as 7% in a severe fragmentation equivalent to the combined output of the German and Japanese economies.
Okay, and moving on, US retail Walmart surges to an all-time high after the company topped quarterly earnings and revenue expectations. Performance largely was fueled by significant gains made in the e-commerce segment of the company. The retail giant also expects to hit the high end or mildly top its previous full-year guidance, and the net income in the quarter gone by jumped by $5 billion versus a $1.6 billion at the same time last year. Revenues too jumped by 6% for the company, keeping an eye out on Walmart.
And the European Union has slapped Facebook parent Meta with a major investigation on alleged breaches of the blog's child safety rules. The European Commission said that it is investigating whether the social media giants Facebook and Instagram platforms may stimulate behavioral addictions in children as well as create so-called rabbit hole effects. Also adding that it is concerned about age verifications on the platforms as well as privacy risks linked to the company's recommendation on algorithms.
Moving on, and in a major licensing deal for artificial intelligence firm OpenAI, the organization says that it has inked a multifaceted deal with the web platform Reddit. Now, the move will allow OpenAI to access Reddit's data, application programming interface, and train its AI models on Reddit content. Additionally, the deal also makes OpenAI Reddit's advertising partner, and post the announcement, Reddit's shares actually surged as much as 11% in trade.
If you like this video, then like, share and subscribe to ET Now.